Welcome to Option Trades Today. I'm Tony the Bat Batista, and boy, do we have a market to talk about today. February 2nd, 2023. And if you've been following my trades, you know we are picking up short delta, and you know it has not been working well. Coin for one, W for another. Tesla's a thorn in my side. Amazon, which I had long delta in, has become short. Sometimes stocks just move too far too quickly. I'm doing my best to stay mechanical, but I think I'm failing you a little bit here. But I still hope you like and subscribe to this video because it's real and it's live, and we don't sugarcoat it and only show you the positive trades. We show you everything we do, and you know you can see all those trades on the follow page. Let me show you that follow page right now. If you go to the Tastyworks platform and you come down here and you click on follow at the bottom, all the follow traders will be there for you. If you click on just Bob the Trader, that's me. Here's my Microsoft rolling up the untested side. Here's my Tesla rolling up the untested side. And you know, if you're doing a lot of rolls, then your market or your opinion on the market is not going in your direction. When you're closing trades and buying things back and selling out strangles back, then you know you're doing a good job. But let's take a look. And as you can see on the follow page, I'm not going to show you what it is quite yet, but you can see I'm going to do a trade in SPY. But let's take a look at what's going on. Even the S&Ps right now are up 57 handles. They're trading 41.89. They almost touched 4,200. I think we're up about 1,000 points in the NASDAQ futures in the last 3 days or so, just about 1,000 points. A huge move in the market with volatility contracting in a big way also. Now today, it's staying a little bit bid, but how low can volatility go? That's really what it comes down to. And for me, volatility seems to be at a point where it's not going to go too much lower. Will we see a 16, 17 vol? I don't think so, but we'll see. And believe me, my portfolio is suffering because of that market opinion, because if vol is going to stay bid, then the market is going to take a little bit of a downturn. Bonds are up 19. They've had some good two-sided action. The only thing that hasn't had two-sided action is every equity in even the S&Ps, the NASDAQ, and the Russell. The Dow, on the other hand, although it's down today, has been going mostly sideways. Some good two-sided action there. Unfortunately, I don't have a lot of Dow products or a lot of Dow positions. I have a lot of NASDAQ positions, and I am taking it on the chin today. So what are we going to do? I'm going to do a trade today that I have not done on my podcast before, and I hope you enjoy it. You look at the IV rank in SPY, it was just under 0 at a negative 0.1. So what am I looking to do? I have to have if I'm going to do a diagonal, I have to have a directional bias. Here is a way when I'm picking up too many deltas in my overall portfolio, and I don't want to get, more short another stock or something that's going to affect my overall portfolio. I do it in a very small way. A diagonal, I think, is a very small way of picking up short deltas, but still give yourself some movement. Now, we like to sell options around 45 days till expiration. 43 in March is perfect. Buying options, we would go to the next month. I'd be looking at April. I'd be looking at April with 78 days. Now, when you're doing a calendar spread, you're looking at the volatility between the months. And if you look here in March, the volatility is 19.3. And if you're looking at April, it's 19.7. You don't want these numbers, or I prefer to have these numbers as close as possible, or on earnings, you'll sometimes see the front month trade higher than the back month. Rarely will you see both months trading at the same implied volatility like you have now. And in fairness, you have had for the last month or so. So it's not a phenomenon that's happening just today. It's been happening for about a month or more. So what am I going to look to do? I'm going to look to buy April implied volatility and sell March volatility. This is a defined risk trade with a directional bias. Now, the only thing that would take me away from a trade like this is if April volatility was 3 points or more higher than March. So if April vol was something around 21.5 to 22.5, this April vol was 3 vol handles, 3 vol points higher than March, then I probably wouldn't want to put on a trade like this. So what am I going to do? I like to go to the option that I'm going to look to buy. I go a strike or two in the money. So I'm going to look to buy the April 418 puts, and I'm going to look to sell the March. I want to pick up a little bit of short delta on this play. So I like to go a strike or two in the money. I like to go a strike or 2 or 3 out of the money on my sell in March. I'm going to go to the March 413 puts. I did this trade at $4.70 when the E-mini S&Ps were not too far from here, but volatility's ticking up ever so slightly. Not a trade I think you have to reach to get. I put this trade on. You'll notice that there's no probability of profit on here because it really is a directional and volatility sensitive trade. There's no way that the computer can simulate what the volatility is going to be in March or April. But if you wanted to change those volatilities, you could take a look at that in the curve view, and you can also play with the volatilities, make them higher, lower, see where they're going to go or how this will move. It has a negative almost 8 deltas. Now, again, that beta weighted delta, since this is SPY, is going to be exactly the same, right? Because everything that we do on the platform is beta weighted towards SPY. So I'm buying this at $4.70. It has a positive, even though I'm paying a debit, it has a positive almost $3 in theta decay. So I get $3 a day to hold on to this position. What's a max profit in this position? Well, it's $5 wide. I mean, all things being equal, if the stock were to close at 413 in March, that 413 put would be worth 0. That April 418 put would be worth $5 plus some premium, since it's going to have around 30-ish days of premium. This could be a very home run type trade. Now, listen, this is a low 50-50, maybe 55-45 probability of success in your direction. Slow moving typically. Again, if it goes up $1 or down $1, since the delta is around 7, this is going to move about $5 to $10 on a $1 move. But again, SPY move $5 or $6. If you got a $5 or $6 move in your direction and you got volatility expanding, now remember, volatility is going to expand in April as well as in March, maybe you'll pick up a couple of more bucks. So this is a trade where I'd be looking to make $1 or $2 on if I get the direction right. If we stay inside around a $5 range, say around 421 or so or lower in SPY, this will be a profitable trade. That's my first diagonal trade that I've put on in this podcast. And again, what do you do when things aren't clicking in your overall portfolio or your own personal trading? You try to find strategies that move a lot slower. If I wanted to get even less directional, I would have put on a calendar spread. That would be the same equal strikes on both sides. I'm still taking a little directional bias. To put on a trade like this, you would have to be a little bit negative. Now, don't be negative on my podcast, but send any comments that you like or anything that you don't understand, or maybe even suggestions that you'd like to see. Please like and subscribe to our channel, all our channels, not just my podcast. And do me a favor, market's doing well today. Most of you are probably leaning a little bit long in your IRAs. Move those accounts and do this type of trade in your IRA account at Tastyworks. That's tastyworks.com, and take advantage of all of the different perks in the #1 brokerage firm in America and the universe.